Hello, welcome. We give our colleagues joining maybe two more minutes so that people can join, and then we'll continue. Thank you. Welcome. My name is Peter Malika. I'm the head of UNCDF in Tanzania, and I'm the moderator of this webinar today. On behalf of UNCDF, thank you all for joining us today on this webinar and for the discussions on untapped finance for African cities. We have over 250 participants we're expecting to register today. They're coming from central governments, local authorities, think tanks, academia, development partners, public and private sector. The objective is very simple. We want to build awareness of this instrument and build national capacities to do this, and also manage risks and change this narrative from untapped to tapped. Maybe I introduce UNCDF very briefly. As you know, UNCDF is a UN agency and with a capital mandate, with an investment mandate. And our role in this, specifically in promoting untapped finance for African cities and specifically municipal revenue bonds, is to help issuers of these bonds, and these are mostly subnationals and national institutions, to be able to issue bonds. So we support by providing technical assistance to structure these bonds in order for those bonds to be listed in the national capital markets. And very quickly, I'll run through the agenda of the day. We have about an hour and a half for the duration of the webinar. We'll start with opening remarks from UNCDF, and then we'll go to a video which shows an infrastructure project, which is a typical candidate for a revenue bond. And then we'll start our webinar. We'll have first round of questions and answers and discussions, which will take about 20 minutes. And then we'll have a second round of questions as well, which will take about 20 minutes. And then we'll have a Q&A question. And then we'll have closing remarks. But I think what is more important is during the discussions, the deliberations, you should feel free to write your questions in the chat box, and also in the Q&A questions, you can raise your hand, but also you can type your questions. So without further ado, I would like to see if our guest who is going to do opening remarks is there, Mr. Jaffer Machano. All right, so I'm told Jaffer is not there, but he'll join later. So let's go directly to the video, please. It's a 3-minute video.
Local government authorities face significant challenges of addressing poverty, inequalities, and exclusion due to a lack of sufficient sources of funding. But how do we support them to access new sources of financing that they need to drive inclusive economic growth? How do we empower local governments to do great things for their communities?
Kwa kifupi tukiongelea ubora wa stendi hii, ni stendi bora kabisa Tanzania, kwani ukilinganisha na kule tulikotoka ilikuwa ni stendi ambayo kwanza ilikuwa imejengwa kwenye hifadhi ya barabara.
Over 14,000 passengers now use this new terminal every day. This has triggered new demand for goods and services, attracted new businesses, and provided new jobs for Kibaha residents, including young women.
Ya zamani nilikuwa sizunguki tu ofisini. Kwa sababu hiyo nashukuru kwamba nimepata ajira. Nilikuwa ni mwajiriwa chini ya, lakini kwa sasa hivi najitegemea.
Kwanza stendi ile haikuwa na sehemu maalum ya kupitia. Kwa mabasi yalikuwa yanaweza yakapita huku, na pengine mvua kubwa inapokuwepo kwa sababu ya tope lilokuwepo yanapitiliza barabara kuu, kwa hiyo hayaingii stendi. Kulikuwa kuna adha ya pengine hata abiria kuachwa huku wakiwa wamelipa nauli zao.
Kibaha serves as a transit point for all vehicles traveling to and from 29 regions of Tanzania and the neighboring countries of Kenya, Uganda, Malawi, and Zambia. This new facility helps the town fully capitalize on their strategic location. Since its opening, the local authority has seen its revenues double.
Pamoja na kwamba imeongeza mapato kwa halmashauri na serikali kwa ujumla, pili imeweza kutoa ajira nyingi. Kumbuka kwamba humu ndani tuna vijana ambao wanauza bidhaa ndogo ndogo, matunda, biskuti. Vijana hao wamejiajiri. Baada ya kwenda mitaani kuiba, sasa wako sehemu wanapata fedha, wanatunza familia yao. Kwa hiyo manufaa zaidi ya mapato, pia tumeweza kutoa ajira kwa jamii inayotuzunguka.
The new bus terminal has led to additional complementary investments by the local government. A new Kibaha modern market is being constructed adjacent to it. New feeder roads leading to the terminal have been built. Electricity and sewage lines have been connected, and new businesses have mushroomed around the terminal. Beyond the bus terminal, Kibaha has seen significant local economic development multiplier effects. Connecting the Kibaha local government to a new revenue source has improved the service delivery to their people and catalyzed local economic development. Together, we're seeing how a limited investment in the local development setting can unlock additional capital from the public sector and accelerate the implementation and the localization of the Sustainable Development Goals in Tanzania.
We showed this video because it's one of the infrastructure projects was supported by UNCDF in partnership with Kibaha Town Council in Tanzania. The reason we showed this project is because how it was financed. It was financed by seed capital grants from UNCDF, but also it was financed largely from central government, from the government of Tanzania, by grants, the fiscal transfers from the central government. So this is a project that can easily be financed by a municipal revenue bond. And the money coming from the central bank, from the Ministry of Finance, could easily go into social delivery infrastructure projects like, in the sector of education, in the sector of health. And a project like this, which is income generating, can be part of the municipal revenue bond portfolio. So we wanted to show this as an example. We will go back to the opening remarks. I would like to introduce our colleague from UNCDF, Mr. Jaffer Machano, who is the Municipal Investment Finance Advisor based in New York. Mr. Machano, welcome, please, for opening remarks.
Thank you, Peter. I guess good afternoon, good morning. First of all, thank you, Peter, and the organizers for an arrangement like this. This is exactly what UNCDF aspire to do globally, especially in the countries that the government has requested the support of UNCDF. We pride ourselves on ability to unlock capital, especially for local infrastructure. We do that in following our international protocols of SDGs and also following Habitat 3 and Addis Ababa Agreement on innovative finance. Having said that, we do our calls we do our meetings, especially to introduce with wider public, because it's important for something like this to be understood not just by those who work to open the market, but also the market and local government officials. And today, I think for us, it's a historic day because we've worked quite a bit to support Tanzania to do this. We are currently working with Bangladesh, Morocco, Senegal, and a few other countries on this area, and Ghana, where we are pretty advanced in Ghana. The way we support, I think this is also important to notice, being a UN agency, the way we support is through technical assistance. I think we'll talk more about that, but also we support credit enhancement. We support putting together the project as a courtesy for the government, who is a member state of UN agency, in terms of feasibility studies and designs and that kind of work. I would like not to take too much time in the opening and give more time in the question and answer period, and allow more of the discussion to flourish and questions to answer. I am handing over to you, Peter. Looking forward to be productive part on this meeting. Thank you.
Thank you, Jaffer, for the opening remarks. And point well taken on the role of UNCDF in supporting project developers for investment readiness and the technical assistance that comes with it. So I want to introduce panelist number one. Our panelist number one is Dr. Charles Mwamaja. He is the Commissioner of Financial Sector Development, Ministry of Finance in Tanzania. And Commissioner, I'll ask you two questions. You can address these questions, provide your input, your technical input from government in the next for 5 minutes. Question number one: what is the problem that instrument like this will solve? Can you provide a bigger picture from government perspective? In addition to that, local authorities have strategic challenges in raising capital. So maybe if you can highlight a little bit from your experience. Over to you, Dr. Charles Mwamaja, Commissioner, Financial Sector Development, Minister of Finance, Tanzania.
Well, good afternoon. Well, thank you very much, Peter and the UNCDF. I hope you can hear me. And we are very much thankful for being invited to attend this important virtual meeting. Now, as regards to your questions, Peter, I think to start with, it's very important to acknowledge that this instrument is very, very important. And all along, this has been recognized in different policy documents that we have prepared. For example, in the 5-year national development plans, one of the most important aspects that we recognize and note is that the need to decentralize services at the local level. And in this country, we have more than 180 local government authorities. And for quite some time, they have been much more depending on the government to finance a number of their development activities in their respective areas. But equally important, as we are now implementing the National 5-Year Development 3, the plan still recognizes the importance of having local government authorities on board as far as development projects are concerned. But also much more important is that we have also prepared the Financial Sector Development Master Plan. This is a 10-year document that gives a broad direction as to where that we want this financial sector to go. And one of the issues that have been highly addressed in the Financial Sector Development Master Plan are the issues related to long-term finance. And in the long-term finance, these are the issues that are mostly addressed. So coming to an instrument like this, because in this country all along, we have been using what I may call the traditional sources of financing. And when I say the traditional sources of financing, I mostly refer to the sources that relate to the taxes and to a certain extent, what we receive from grants and loans. But again, what we are observing is there has been a financing gap because there are a number of issues that need to be addressed. But again, there has always been a financing gap. So an instrument like this, we think that it will assist the government in having some space to concentrate on some other projects that might not interest the private sector to fund. But we also have a feeling that it's sufficient to implement a number of projects altogether, because if this alternative source of financing is used to complement what the government is using, then we are sure to implement a number of projects across the country. And because of that, we are certain that there will be issues related to efficiency, effectiveness, improved governance, and then what we have in our development agenda will be achieved much more quickly. Now, Peter, having given those explanations, now maybe allow me to come back to the second part of your questions, that what are the strategic challenges that local government authorities will be facing when it comes to issues of financing their development budget. The most important thing first to observe is that it is also important to recognize that the revenue base of local government authorities is still much more minimal. But again, in order to benefit from this modality, then we are finding it is very important to build the capacity. Because if you are to attract the private sector, if you are to attract the financial institutions, then for sure, local government authorities will need to make sure that they are able to prepare project proposals that are acceptable to that levels of funding. So what we are finding is, even though the government has launched what we call the alternative project financing strategy as part of a mechanism in implementing the Financial Sector Development Master Plan, what we are finding is we still need to build capacity at the local level, especially when it comes to issues related to the preparation of documents that will suit the requirements that are associated with this kind of funding. Otherwise, we have just started, and all along there are a number of projects that are being implemented from the government financing, from the traditional sources, but we are finding that alternative project financing will be a very useful means in addressing this financing gap, but ensuring that the government is able to implement a number of projects, and by so doing, to be in a position to reach what we have set in our development agenda. But most importantly is This gives room for the private sector to come in and complement what the government is doing. So in a way, we are finding it is a very important mechanism to get the private sector on board as an important partner when it comes to issues related to the implementation of government priorities in this country. Thank you very much, Peter, for giving me this opportunity. Thank you. I hand it over back to you, Peter.
Thank you, Dr. Mwamaja, providing the government perspective on municipal revenue bonds. So one of the points there is that municipal revenue bonds or municipal bonds has been accepted, recognized by the government through a number of policy documents that Dr. Mwamaja had mentioned. It is part of the financial year development plan for Tanzania. One point is that, local authorities and cities depend on grants.
Okay, so thank you, Dr. Mwamaja. So over to Mr. Jaffer Machano, our panelist number 2. Jaffer is the Municipal Finance Advisor, UNCDF in New York. He's going to provide those views on municipal revenue bonds. So Jaffer, if I play a devil's advocate here, why don't cities use revenue videos going from multi-platforms of the World Bank? And how will you answer a question like this?
So I think Dr. Mwamaja touched on that a little bit. We talk a lot on issue of foreign direct investments, and countries tend to have investment centers and policies of being able to bring in or attract foreign direct investment. But if you look in any developed country, there's a lot of local capital that is unlocked, that is, I will call it locked, that is not used for productive purposes. And we see this a lot. We operate in 42 countries in Africa, and one of the biggest capital that has not gone to mostly productive sector, I will say pension and insurance pools. So we design the municipal local government to do 3 things. One, to not be able to encumber the national debt internationally, meaning not to try as much as we can to remain within the debt limits that the countries tend to negotiate with the IMF and the World Bank, and hence to be issued in local currency. So we really encourage countries to create a market, because at this point it's a market failure for institutions like local governments not being able to do it. That will intermediate between pools of savings, the pension funds, wealthier individuals, insurance funds, and others, with the need that there is in the market. So they shouldn't be the video you showed of Kibaha market. Why couldn't that be done through capital markets and allow government money to go to rural energy or others where they will not be able to get capital? So I think to link that to your question on the World Bank, this is a pure, in my opinion, market failure from the market terms I'm talking about, where policy and regulation is already there, the operations of the markets are already there. It's actually, there's a need of trying it. So that's number one. Number two, when citizens from the democratic perspective engage in the local investment, they tend to be more active. And this is something that we see it again and again, that the investing community in their local community tends to know and want to know what's going on. Instead, a lot of people are very passive, especially in the local elections. Sort of local ownership of local infrastructures, from schools to markets to local hospitals and the like, tend to bring a bit more vibrancy in a local elections. And then the third piece, I will say, is when you invest in the local markets, you get returns. So there's a way of wealth building that otherwise is not there for people locally. Over to you, Peter.
Thank you very much, Jaffer. I think great points well taken. Here, one of the key points you mentioned is that there is a lot of capital locally in the local market, which is not tapped to be invested in productive capacities. We talked about innovations of this kind of bonds and this kind of capacity, so that they will not tie the national debt, and the currencies will be issued in local currencies. And because of that, it is building capital markets, and also building the financial sectors in the country, and wealth building in the country. So I think we have to be clear here that we are talking about raising capital for a purpose. We are raising capital to finance development activities. So with that, let me introduce our panel list number 3. Ms. Khomotso. Ms. Khomotso is Chief Officer of South Africa Local Government Authorities. Specifically, Khomotso was part of the regional teams that issued municipal bonds in the Municipal. So she has first-hand experience. So Khomotso, you heard Dr. Mwamaja, the strategic challenges of local authorities. We heard Jaffer talking about there is a lot of capital that can be mobilized within the countries and can go to the local authorities and can go into development, focusing on building productive capacity. Now, there must have been obstacles for the issuance of the first generation of subnational bonds in South Africa. Can you highlight a few and how they were resolved? Over to you, Khomotso.
Okay. Thank you very much, Peter, and good afternoon to everyone. And you are not very audible, but I take it that the question, because I have the last bit, basically I need to talk to the challenges that were experienced from a South African context when the bonds were initially issued. Is that the question you posed, Peter?
Yes, correct.
Oh, okay. Yeah, because you're not audible very much on your side, so you might need to resolve that aspect. I just said from a South African context, really, I think the biggest challenge was the enabling legislation, which was then sorted out through our National Treasury, through a piece of legislation called the Municipal Finance Management Act, and as well as the issuance of borrowing framework. And that really provided a local sphere of government with an opportunity to basically tap into alternative sources of financing over and above the traditional in terms of the internally generated funds raised through property rates and taxes and trading services. You would be aware that in a South African context, we have 3 spheres of government, basically, which is your national, your provincial, and your local. But very much the local government has got different categories, but we're now focusing on those municipalities that have a revenue base and a balance sheet basically as well, where they can basically levy taxes. So that created an enabling environment from that context. So once the legislation was basically put in place, when the city of Johannesburg in this instance wanted to take advantage of the opportunity that was provided in accelerating its capital program, went to Mexico for international benchmarking in terms of how the bonds were issued there, and basically pretty much took that into the South African context. But when investors were engaged, I think the biggest challenge at the point was that generally investors were unfamiliar with municipal credit. So there was no municipality prior to 2004 that had basically issued a bond. And part of that credibility setting is the ability to basically meet, the interest obligations when they fall due semi-annually, and during redemption, basically the ability to pay back. So given that there was no benchmark, it was a bit of a challenge. And what then was required was the city to basically work on improving its credit-specific fundamentals, basically looking at the ability to basically generate revenue, bill on time, and collect, and engaging with investors on a continuous basis, such that investors then started to be comfortable with municipalities and how local government basically works. And then the other challenge that was also raised by the investors is the fact that generally the government, the administration runs for 5 years. And then the city was looking at issuing a long-dated bond, because again, from a South African context, is that we can only raise long-term financing towards capital program, not operational expenditure. So as a result, it only makes sense for infrastructure programs to be funded by a long-term instrument. So generally the market would accept a 10-year, even a 15-year in certain instances if you engage in DFIs. So, but investors were basically not willing to issue that kind of a tenor for municipalities, which then resulted in the first issuance being much shorter. I think it was 4 years at the time. So that's how the city basically responded to the risk-averse investors in terms of actually lending to the city for a long period of time. But then what then followed in resolving the issue around the tenor is that when the city came again later to try to increase the duration, and again, investors were still not too comfortable because the first bond had some time basically to go. So basically what then the city did was to enter into guarantee a portion of the issuance of the second bond, which was the COJ02. And at that point, it was supposed to be a 7-year. So 40% of that bond was basically guaranteed by DBSA as well as the IFC. And then subsequent to that, and that was the only structured bond, and it also had multiple redemption points. So it was redeemed over a three-year period. So from a modified duration point of view, it wasn't necessarily a 7-year bond. So basically, I think after 2-3 years with going back and engaging with investors, updating, and them understanding the planning as well, and the fact that the institutional arrangements as we have them in South Africa, that even if a different political party had to take over, they're still obligated to honor the contractual arrangement that the previous government would have basically committed to. So that in that way, it basically protected investors somewhat. And I guess beyond that, as continuous engagement, which we call investor roadshows, that happens probably twice a year, then and also seeing other cities basically coming through, then that confidence was basically built over time, and none of the bonds had to be issued on the basis of either being guaranteed by any of the reputable organizations in terms of the DFIs. So basically, in the main, that's basically what was the challenge. But pretty much, I think we are at a point where all of that has basically been addressed, and we haven't seen a single default. But then the other strategy that the city basically implemented to maximize the duration in terms of the bonds and starting to issue 10-year and 15-year-old, the city introduced what we call a redemption fund, where it's able to set aside cash over time, basically towards redeeming those bonds when they fall due. And that strategy had proven to be beneficial to the city in the sense that in certain instances, and as we've seen in 2010, when most municipalities basically really struggled to even collect their revenues, that the investors were then not exposed to the liquidity risks that the city was experiencing at the time, and the city was basically able to just tap on the investment that it has set aside to successfully redeem those bonds that were falling due, even during very difficult economic conditions. So those were the challenges basically in the mid, but I think the biggest anchor really, it's an enabling policy environment and legislation, the ability for municipalities to basically generate own revenue. Thank you very much.
Thank you so much. Thank you so much, Khomotso, for providing a perspective of the experience in South Africa of issuing municipal bond. I think one of the biggest points that you mentioned was about investors were not familiar with municipality bond. So here in the African cities, and for us who are operating in Tanzania, it is not just the investors, it is the government from political side to get a political buy-in. It includes the issuers of these bonds, the cities themselves. They are not familiar, and many of our partners are not familiar. So there is a big effort here to help, for lack of a better word, to sensitize the critical stakeholders who are part of the issuing. You had mentioned that to reduce risk in one of the bonds, up to 40% of the bond was guaranteed by DFIs. So I think one of the biggest challenges that we are seeing in the process, in the projects or in the bonds that we are working on right now is the capacity developing efforts must continue. We have to bring development partners in so that these are the first generation of bonds to be issued in local currency. And so a lot of innovation is required in order for this to move forward. So with that, let me introduce the next panelist, who is Mr. Nicodemus Mkama, who is the CEO of Tanzania Capital Markets and Securities Authority. So he is going to provide a perspective on municipal bonds from a government regulator perspective, or maybe the overseer from the government side. So Mr. Mkama, there is hope raised here by this instrument. Is there a market for municipal bonds? Let's say in Tanzania, where you are in charge of the capital market authorities, how do you foresee this market to react, considering what the panelist number 3, Ms. Khomotso, had said about the investors weren't familiar with this instrument? Over to you, Mr. Mkama.
Thank you so much, Peter. Thank you, everybody. I'm grateful to be part of the panel on Untapped Finance for African cities, specifically on the municipal revenue bond. Ideally, municipal bond markets is going to be one of the market segments that is going to be instrumental and is going to enhance vibrance in the capital market. Currently, there have been a very big appetite on the existing fixed income instrument, and currently we are having corporate bonds as well as government bonds. So I'm going to speak this in two perspectives. First, in the primal bond market, and secondly on the secondary bond market. Now, in the primal bond market for both corporate as well as central government bonds, If you look on the instruments that have been issued so far in the capital markets, all of them has been oversubscribed when it comes to corporate bonds. We have been having good success stories for the corporate bonds. We approved a medium-term note programs for corporate bonds of NMB with a ticket size of 200 billion. They've done so far 3 tranches, and all of them have been very successful. And the most successful one was the 3rd tranche, which they wanted to get 25 billion, but they ended up getting 83 billion, which is a success rate of 333%. There have been other issuances in terms of corporate bonds. We have one for Exim, one for Tanzania mortgage refinance, but as well, we had some regional banks, including the East African Development Bank, as well as previously PTA and Trader Development Banks. All of them, they have done issuance in the local market, and the issuance has been very successful. In terms of government bonds, we have bonds that have been issued, and we have bonds with the tenures of 2 years, 5 years, 7 years, 10, 15, 20, and most recently, 25 years. And most of them, they are oversubscribed when it comes to primary market. The most recent, which is a longer term bond for 25 years, was oversubscribed by, it had a success rate of 440%. So Peter, what does that tell? It tells that there is liquidity, there is appetite for this instrument. So if we have issuance for municipal bonds, as the regulator for the capital markets, I see the potential, and I see that this is one of the instruments that is going to be welcomed by the potential investors in the market. Now, also, if you look in the secondary bond market on the Dar es Salaam Stock Exchange, currently most of the government bonds are being traded at premium. So that means there is appetite for it, and therefore there is a very big potential for the market. So I see a very big, bright future for the bond markets. So what is really very important is for all key stakeholders to work together to make sure that we start with the right footings, coming up with the right instrument that is going to work for the market. And also I would like to echo on what Mr. Machano said, that there is a untapped finance currently in the local market. If you read the central bank report, it shows that 60% of the currency issued in circulation, 60% is outside the formal financial system. So if we come up with an instrument like the municipal bonds, so we are going to tap this liquidity, which is outside the formal financial system, coming to the formal financial system, and therefore increasing vibrance in the local capital market. Thank you so much, Peter.
Mr. Mkama, and you know, before maybe I get to some of the points that you had mentioned, I wanted to clarify to our participants that when we talk of municipal bond, we are talking about 2 types of municipal bonds. There is one called general obligation bonds, which is so basically the balance sheet of the city or the issuer will be the collateral basically for for the bond, and this very much requires to have a very good credit rating, to have very good financial reporting and financial records. There's another type of municipal bond which is called municipal revenue bond, which is the focus of the conversations today. And municipal revenue bonds is tied to specific projects. So you can say I'm doing a portfolio of 4 projects. It could be a market, it could be an industrial park, it could be a stadium, or it could be one of those. So those projects will be ring-fenced and will be part of the municipal revenue bond. Now, this is important to understand because Mr. Mkama had mentioned the success and the appetite for corporate bonds in Tanzania. And basically, the revenue bonds will be issued on the backbone of the corporate bond structure, which has been tested several times. There are over 25 corporate bonds that have been issued in Tanzania. So that's point number one. Now, if you're doing it as a corporate bond, then there are certain things you have to do. You have to establish SPV, special purpose vehicle, which will run the projects and will be able to ring fence the revenue in order to pay the bond holders. So the issue of good governance and the issues of financial reporting, good financial practices, very critical here. And also point well taken that the markets have been oversubscribed, and there's an appetite for this kind of instruments. So maybe let me go back to Ms. Khomotso on the experience in South Africa. If you can maybe mention a couple of things that are really important. If you had to look back and to look back when the bonds were issued during that time in South Africa and the issuers of today, what are the big lessons learned? What are the big pointers that if you are a city in Africa, you are a city trying to issue a revenue bond to tap this kind of finance, what do they need to do first? A few bullet points on top of your head. Over to you, Khomotso.
Okay. Thanks, Peter, for that. I think the first thing that's basically non-negotiable, that whether you're doing a general obligation or a revenue bond, is the issue around governance and the audit outcomes as well, that investors actually put at the top of the list. So that's the first thing. So in South Africa, we have an additional layer called a clean audit, or unqualified without any findings, which is what normally accountants would basically call it, becomes important. And it also helps in terms of the pricing as well, and also establishing that credibility in the market. And I think the issue around the institutional continuity and the overall strategy of that institution becomes very important. And given that by nature, local government are generally highly politicized, issues around the political outlook and the relationships in terms of the different spheres of government. So then the other aspect then becomes completeness of revenue and generally how that is basically managed, even if you had to do a project finance. So you should have systems in place in a way that you're then able to bill on time, and you're basically able to collect on time, you're able to enforce your credit control, which then also talks to your liquidity position at any point in time. And then also the planning, having comprehensive infrastructure plans and basically the capacity to prepare projects in such a way that they could be run and administered, and the system must allow for the ring fencing of revenues towards a particular project that would basically have been identified. That in South Africa, there's still a bit of a challenge in terms of the capacity around specifically revenue bonds, and I'll come back to it, Peter, very quickly. And it's because that investors have not necessarily seen a credible pipeline of projects coming through from local government, and for a whole number of reasons. That generally when we speak to officials in local government on the technical side, they basically just consume to the day-to-day and the core functions per the constitution, so they don't necessarily have in-house the capacity to actually prepare project, basically all the way into bankability. So in certain instances, they'll probably outsource that kind of a role. But definitely there's where there is merit for bankable projects, investors are able to basically look at it. So I think that becomes a very important system to have in place in terms of how the planning is basically linked to how the municipality wants to basically roll out the infrastructure and as well to finance it. And as a result, then we've seen a culture shift where previously you would have had finance officials within the municipality working on their own in terms of just trying to allocate various sources of finance into various programs, to where you, at inception, the finance officials and the planning officials are able to work together and proactive basically in their approach. So coming back to the green bond, which is one of the bonds that City of Johannesburg had basically issued at the back of specific projects. And of course, those projects had to actually meet a certain criteria in terms of your typical green bond kind of principles. And also the fact that those projects had to be economic projects. So even though the city was able to attract a different kind of investor that chases those kind of projects, and one of the principles being that the revenues of those projects must basically be reinforced towards repaying the investors, there was just still, and I guess it's because City of Joburg is always a city of first, right? So they're always the first ones to go basically in the sector. So there was still that discomfort from investors, and as a result, they added a clause in the agreement to say that should the city basically fall short of actually generating revenue from those projects, then the fallback is that you almost have a balance sheet guarantee as part of that structure. But I guess even with that, as time goes by and investors gain much more confidence in the ability of municipalities to originate those kind of projects, and such that they could be foolproof from in terms of the revenue that gets generated, we would see that shift from the investor community. Thank you.
Very much, Khomotso. I think it is important now we go to the questions and answers. We have seen a lot of questions coming through. So let's go to the questions, and then we'll have participants, the panelists react to some of the questions that are coming up. So over to my colleague here, Stella Liatu, and with the questions.
Hi, thank you, Jeff. Thank you, Peter. So the first question, what is the current legal framework in Tanzania to implement municipal bonds? What needs to happen if this is not happening now? And any comment on initiatives towards diaspora? Thank you.
So, all right, that's question number one. I think this is appropriate if we take this question to Mr. Nicodemus Mkama, CEO, Capital Markets Authorities. Over to you, Mr. Mkama.
Thank you so much, Mr. Peter Malika. Currently, we have the legal framework for municipal bonds in Tanzania is in place. We have last year gazetted guidelines for the issuance of municipal bonds. So that one is in the place, and this is emanates from the main act, the Capital Market and Securities Act. So the guideline for municipal bonds provide guidance on what has to be done to make sure that issuance complies with existing regulatory framework. So we have municipal bonds guideline gazetted last year, and this is also available on our website. So it can be accessed by anybody on our website. Thank you so much, Peter.
Thank you very much, Mr. Mkama. So let's proceed. Stella?
Thanks again. So the second question, what are the real challenges facing local governments in terms of raising funds for development purposes? On the same note, what can the government assure potential municipal bond stakeholders?
It's very clear. The question to the panelists, I'm going to address this to Dr. Charles Mwamaja, Minister of Finance. Over to you, Dr. Mwamaja.
Well, thank you very much, Peter, for giving me this opportunity again to respond to some of the questions which have been raised. It's quite true that local government authorities are facing a number of challenges, especially related to financing issues. And that's why when I was reporting it earlier, I had said that because of that, even when you look at the dependency ratio, you find that the central government needs to support local government authorities for more than 90%. And most of the reasons is that the sources at the local level themselves that are available to finance a number of activities are not that sufficient. They are also very unpredictable, and most of the reliable sources, that's why the government is supporting them because of that. And now due to that fact, we have a feeling here that it is also the duty of the government, in fact, to support local government authorities to reduce that dependence ratio. And one of those initiatives has to do with assisting them to come out with a number of projects that are financially viable, that they will be implemented, and at the end of the day, those revenue sources will be retained at the local level to facilitate a number of activities that are being done. And by so doing, it is likely that over time, even that ratio, the dependency ratio, is also likely to diminish. And because of that, it is also a policy issue for the government to support local government authorities so that they can reduce debts. And one of the issues, as I had indicated earlier, this has also been tackled in the Financial Sector Development Master Plan. And from that, we have been able to prepare a strategy, alternative financing strategy. And one of the issues that have been greatly addressed in the strategy is to assist local government authorities to address these financing challenges by coming out with a number of alternative financing issues, including these municipal bonds. And maybe it is also very important probably to note here that the process of preparing first the Financial Sector Development Master Plan alone, but again the alternative project financing strategy have been very, very participatory. And a number of stakeholders were involved, including the private sector. And this was launched by the government. So that alone, you can see that first, there is a lot of political guidance. And as Mr. Mkama has clearly elaborated, the legal framework is okay. But again, there is a lot of government support and involvement in addressing this challenge. So yes, there is financing challenges, and this is one of the mechanisms in which we are trying to address by issue of alternative project financing, including municipal bonds and some other options which we have. Thank you, and back to you, Peter.
Thank you so much, Dr. Mwamaja. Let's go to another question, please.
So the question reads, with a low participation on the capital market in Tanzania, how can you make this municipal bond be lucrative and achieve its intended target? So I think this has already been addressed by Mr. Mkama. Let me go to another question. There was a question on the roadmap towards municipal bond issuance in Tanzania and the experience of UNCDF from other countries, and also how UNCDF is set to assist municipalities and cities.
Thank you, Stella. So this question of roadmap, maybe we can project the roadmap. This is a draft roadmap for a potential municipal bond that we are doing in Tanzania. If you cannot project, can you read through the roadmap? What is the starting point? What is the end point? 1 minute, please. So the journey for doing a municipal bond basically starts with bankable projects. And there is a criteria of what we call a bankable project, a detailed criteria. We can share the breakdown of it. And then the next step is for a team to do due diligence and start structuring. So in this case, UNCDF and its partners, we play as the lead transaction advisor. And we are part of helping the issuer to formulate an SPV, to secure a guarantee from development partners, and also to prepare a prospectus. And then after that, all of this goes through approvals from the Ministry of Finance, Ministry of Local Government, Capital Market Authorities, and then it goes to Dar es Salaam Stock Exchange. There is always an investors roadshow. And basically at this point, this is where we gauge the specific bond appetite of investors in the market. And the investors are, national investors, institutional investors, individual people, financial institutions, but also in Tanzania, all the SADC countries can invest into the capital market. So once it is issued, the proceeds of the bond will go towards the project. So this is the quick roadmap of issuing a municipal bond.
Okay, so the next question, how is the UNCDF prepared in ensuring that the municipal bonds issued in developing countries aligns with projects related to environmental protection and climate change?
So one of the things that we do in some of the projects, we are part of developing a water infrastructure bond. And what we are trying to do is to make this water infrastructure bond to be climate resilient. So we are going to add filters. We are going to make sure that it meets the requirement, that infrastructure meets requirement to make it a climate resilient infrastructure. So that's part of the UNCDF support, technical support to the project. Next question.
The next question goes to Dr. Mwamaja. It says, apart from existing legal framework, is there a political support?
Dr. Mwamaja.
Well, thank you very much for that question. In fact, I can say that there is a lot of political support. And this is also going to address challenges at the local level. And in fact, we are saying that it is at the local level where the people are. And in fact, when we talk of the launch of this strategy, the alternative project financing strategy, it was launched by the Minister for Finance and Planning. And I understand that a number of stakeholders were involved. But apart from launching, we have had a number of times. But again, that from all the sessions which we have had, there is a lot of political support which we are getting, because it is evidence that with this strategy, a number of challenges will be addressed and the well-being of the people will be improved. So the answer is yes, there is a lot of political support. And in fact, we find that eventually, even in a number of documents that we will be producing, issues related to municipal bonds will be addressed. And in fact, even recently, we are planning to have a number of sensitization seminars so that to sensitize these people who are responsible for the preparation of proposals to come up with a number of proposals, because you can see that there is a lot of appetite and we can do more with that. Thank you very much, and back to you, Peter.
Thank you so much, Dr. Mwamaja. We will take maybe a couple of more questions, and then let's continue with questions for now.
So another question says, municipal revenue bond is a new revenue enhancement instrument to LGAs in Tanzania. What tools or methodology will you use or adapt to bring?
Okay, so this is a question addressed to UNCDF in terms of what kind of tools, what kind of technical support to bring it to the local government authorities to get political buy-in at the local level. Mr. Jaffer Machano, if you can answer this question.
Thank you, Peter. I think especially for tools, we we do this a lot. I mean, there's a reason why in this panel we've asked Khomotso to be here so that they share examples. Maybe just to mention 3 that we do. First, I think Peter touched on a little bit on the technical support in preparation of projects, because we agree, as earlier panelist has said, there's quite a capacity issue within municipalities to structure their projects. So we can do this from feasibility studies to engineering studies and designs and all the way to business plan and bankability. We can support the issuance process because CMSA needs a process specifically for approval. We also provide grant for partial guarantees or insurance to the bond. So we can subsidize the premium to that. And for the first few, in order to get the market going, we can also act as anchor investors on the issuance. So we have an array of tools to do that now that UNCDF mandate has been extended a little bit into the investment side. But also, if you have followed this discussion, Peter and the Tanzanian team have been very engaged with the government in the last 2-3 years in making sure that the regulatory environment is expanded to bring in municipal bond as a tool that the government also can support regulatory and legally to be issued. Peter, over to you.
Thank you very much, Jaffer. We want to project one slide which shows the institutional framework in terms of the partners who are involved in making sure that this happens. We have figured out from UNCDF that no agency alone, no institution alone will be able to do this. So this is the key partners, basically. So in the screen here, you can see the regulator, the government side, you have capital markets authorities. On the right side, you have government, meaning consent for issuance from Ministry of Finance, Bank of Tanzania, PRL, pilot cities, and the local authorities that needs to approve at a local level. There is a credit rating at the bottom on the right. Could be sovereign, could be subnational credit rating, and for a credit enhancement for a municipal revenue bond, most likely it will be a subnational credit rating directly at the issuer level. You have Dar es Salaam Stock Exchange. You have international partners, development partners that we are working with, who will be the issuing guarantee institutions. In our case, we are working with the government of Sweden through SIDA for guarantee. We have worked with USAID, and we are working with other institutions, regional guarantee institution and sovereign DFIs in terms of doing the guarantee. As I mentioned before, there is no requirement for a sovereign guarantee on a municipal bond. There is also the transaction advisor, the technical support to make sure this happens. So UNCDF is playing that role in terms of facilitating political approval and political buy-in from government. Basically, the ministry is responsible. They're responsible for guiding us through that process. But the structuring, before you go to capital markets, they expect good governance of the company that is issuing. They are expecting good financial management. So the structuring of all of that is part of the technical assistance that is issued. No one agency or no one institution that you see here will be able to issue a municipal revenue bond alone. So collaboration of partners, collaboration of government is very critical to make sure that this happens. So we'll take one more last question, and then maybe before we take a question, we are almost the time is almost over, and 1 minute reaction from each of the panelists, and we'll start with Khomotso. 1 minute, please.
Sorry, Peter, I stumbled a bit on my mic. But I just think my overall reaction, and because I've also just been looking at some of the questions that are coming through in terms of how long it will take, maybe you share the experience based on the work that you've basically been undertaking the past 2-3 years. But I guess the most important thing, and as you had indicated, Peter, as well earlier, is that one, you need an enabling policy environment, a borrowing framework, and alignment through the various spheres of government in terms of buy-in. So once that is basically in place, and then you've got your credit ratings, and that, then you basically pretty much good to go. So the regulatory environment, I guess, becomes a catalyst to enable local government in terms of tapping into these alternative sources of financing. So it's doable, but it requires a lot of political support. Thank you.
Thank you very much, Khomotso. Dr. Mwamaja, a 1 minute reaction, please.
Well, thank you very much, Peter, for this opportunity again. But I think this sort of innovative financing mechanisms, I think they are very much important to complement a number of government initiatives. You know, I said earlier that there is a lot of challenges that we need to address at the local level. Now, these instruments, when used efficiently, will be able to address a number of challenges, because these projects and the revenues that will be generated at the local level, as I said earlier, they will be maintained at the local level, and they will be used to address a number of issues that will assist in improving the well-being of the people. So it is a very important and a useful tool, and they will be working towards to ensure that these things becomes a success. Thank you very much, Peter. Over to you.
Thank you very much, Dr. Mwamaja. Mr. Mkama, please, from Capital Markets Authority, your 1 minute reaction.
Thank you, Peter. There is a very big potential for municipal bond market becoming vibrant. What is really very important is putting a good ecosystem that will support successful municipal bond market. So what is really very important is to make sure that all key stakeholders work together to make sure that we put this in place. One of the key success factors is that we need to have a pipeline of revenue generating projects that are bankable and that are going to be attractive to potential investors. So it's really very important as we develop pipelines of these projects to make sure that they are going to be quite attractive. And lastly, it's really very important to continue building capacity, both at all levels, to make sure that local government authorities have the capacity in terms of financial management, as well as good corporate governance practice, because this is critical as we consider approving the prospectus for the issuance of municipal bonds. Thank you so much, Peter. Back to you.
Thank you so much, Mr. Mkama. Jaffer from UNCDF, your reaction, 1 minute reaction, please.
I want to echo Mr. Mkama. I think the potential is quite huge. The fact that it has not been done is not making it not doable. And one more point to think through. Cities tend to have quite large economies without being recognized. So we've done credit rating for 10 cities in Bangladesh, quite a few in Togo and Benin, and now we are doing others in Senegal. And there's quite a good experience to show that you get investment grade cities to be able to do it. So I think between multilateral support in the technical capabilities and decision-making, the potential of the market that has been described, and the demand that is there to build local infrastructure, especially as these climate issues are coming in. This is definitely doable. Over to you, Peter.
Thank you very much, panelists. I wish I can do a round of applause for our panelists. Thank you very much for your input, for your contribution, your insight, your experience. And there were a number of questions that were not addressed. We are going to address these questions. We will continue to conduct most of these technical series like this one. And so basically here, what we are talking about here, it is about finance, but finance for a purpose, finance for development. And if we are able to tap into this, this finance, we are able to develop our national capital markets. We are able to issue these in local currency and long-term investments, and also to make them climate resilience. So with that, I would like to thank all the participants. We have, I think, over 100 participants right now. Some of them are sitting in groups. And we want to thank you for your time, for your patience, for your questions. And I want to thank all the panelists for their time, for contribution today. But above all, I think behind the scenes, there is technical teams and the organizers of this event. Some of them have worked the last 2 days, many hours. So thank you all. So we have come to the end of this webinar, and we thank you. The recording has been, there has been a recording which will be shared. Thank you all. And one more thing, the email we are projecting here is local.finance@uncdf.org. If you want to get in touch with us, if you have questions or if you need support to do this, local.finance@uncdf.org. Thank you, and have a good evening. Bye-bye.
Thank you.
Thank you. Bye-bye.
Thank you. Bye.
Bye-bye.
Thank you.